Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is your weekly video newsletter. This week we're going to talk all about loan modifications. And you might remember that term from about a decade ago, 12 years ago. The term loan modification was being used all over the place. Now, loan modification is what it says it is. Its title is what it is. You are actually modifying the terms of your current loan. Now, the reason I'm bringing this up today is because in the month of October, you have a lot of folks who had filed for forbearance back in April that are going to have to end forbearance or extend forbearance. Now, what we're starting to see already is that some of the forbearances that are ending this month are going into loan modification, meaning that the homeowner and the lender are agreeing on new terms of the mortgage note that was originally signed. That could be a payment up front for part of what's due and the rest tacked on to the end of the loan. It could be a reduced rate in some cases. Even more rare would be a reduction of the loan amount owed or a complete forgiveness of the amount that was forbeared. So let's make sure we keep these things clear and different. Forbearance is not forgiveness, and forgiveness is definitely a very, very rare option. And it's because the banks have the house as an asset. So if for some reason the forbearance ends and you're unable to pay, and then you have a loan modification, and then they do some sort of forgiveness, eventually when that road ends, things can result in a future foreclosure. And we don't want that. So one of the things that's happening right now is that a lot of banks are starting to do loan modifications again. Now, you do not necessarily need someone to help you with your loan modification. You can work directly with your bank. Now, back in the past, people used to sell loan modification services because you needed an advisor to help do blah, 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 blah. That isn't always the case. And so what I wanted to let you know today is that if you're in a situation where you are in forbearance and you can afford to come out of forbearance, or you've already maybe ended your forbearance and you'd like to try to take advantage of the lower interest rates, you can do that. The first best option is to try to do a refinance on your own. And if you cannot do that, then the conversation can turn to be loan modification. But something you should know is that it's not going to be simple. Even though it sounds easy, it won't be simple because we're coming out of forbearance and we're going right back into a loan application and into underwriting. We're gonna have to explain a lot of things and document a lot of things. So if you're watching this today and you're in forbearance or you've come out of forbearance and you want to get a lower rate, let's start that conversation. If you are not the person who's in that situation, but you know that person, that's someone that we can talk to and maybe help them out before they have to get to loan modification, before they have to go and ask for loan forgiveness, and certainly well before they're staring down a future foreclosure. So please help yourself and help the ones that are around you who might be in the situation by informing them that forbearance isn't forgiveness, loan modifications are an option, but also refinancing after a forbearance is also an option. So there's these choices, and these choices are important to kind of take in priority order to give yourself the best shot of continuing your home ownership in a healthy financial way moving forward. Thank you guys for watching this week's video newsletter, and we'll see you again next week.